When big companies drop their earnings reports every quarter, most of the time it's just a sea of numbers, right? But every now and then you find this hidden clue that points to a massive, massive strategic bet. And in Capital One's latest report, well, they didn't just drop a clue, they dropped a bombshell. So, this wasn't just your standard call about revenue and profit margins. No, no. Capital One CEO Richard Fairbank, he got on there and laid out this huge vision for the future of banking. And it wasn't just talk, it was backed by a multi-billion-dollar bet that really got the whole industry talking.
And yeah, this is the number that just pops right off the page. $5.15 billion. I mean, that's a huge investment, even for a giant like Capital One. It's more than just money, it's a statement.
So that's the big question, isn't it? What in the world did they just spend over $5 billion on? And what kind of company is worth that kind of cash in this market? Well, let's dig in. Okay, so the big reveal is they bought a fintech company called Brex. Now, if you're deep in the tech scene or the startup world, you're probably nodding your head right now. But for everyone else, this move is a massive signal that Capital One is making a serious play for a whole new frontier in finance. The official press release called Brex a pioneer in business payments and spend management. Okay, that definitely sounds like a bit of corporate jargon, doesn't it? So let's break down what that actually means for a real business. All right, so to really get why this deal is such a game changer, we need to pull back the curtain on what Brex actually does and, why they've been so incredibly successful. So Brex built what's called a spend management platform. The best way to think about it is like a financial Swiss Army knife for businesses. It's not just a credit card. It's an entire system that wraps up your expenses, your budgets, travel, accounting, everything all into one really slick, modern package. It just solves a massive headache for companies. And get this, just look at this client list. I mean, these aren't your average companies, right? We're talking about some of the most innovative, fastest growing tech businesses on the planet. Brex basically became the default financial operating system for the entire startup ecosystem. And that, right there, gives them some serious street cred. And this quote from the CEO, Richard Fairbank, just nails it. It really shows you their thinking. He's not just buying a company. He sees this as the next logical step in a journey they've been on for decades, to stay ahead of the curve and win where the world is going, not where it's been. Okay, so here's the $5 billion question. Is Capital One making this huge play from a position of overwhelming strength, or is this maybe a move to shore something up? Let's take a quick look at their financial pulse from that same report. So first, let's look at their earnings per share, or EPS. It came in at $3.86. Now, the company's definitely profitable, but Wall Street analysts were hoping for a little more, around $4.14. So technically, that's a miss. But then you look at revenue, and it's a totally different story. They brought in over $15.6 billion, which actually beat expectations. So it's kind of a mixed bag, right? They're making a ton of money, but the profitability wasn't quite where the experts wanted it. And that makes a big, ambitious acquisition like Brex even more fascinating. Now, you have to remember, this Brex deal isn't happening in a bubble. Capital One is already right in the middle of another monster acquisition, buying the Discover Payments Network. I mean, that is a huge project all by itself. So the big question on everyone's mind is, can they really handle both at the same time? Well, they gave us a quick update on that. It sounds like the debit card switch is almost done. We should start seeing new Capital One credit cards running on the Discover network pretty soon. And their top priority is getting Discover accepted in more places around the world, which is absolutely key. And the CEO, he knew everyone was thinking this, so he addressed the concern head on. He came right out and said, very clearly, that the Brex deal is not going to get in the way of the Discover integration. They're confident they can walk and chew gum at the same time. But of course, with any big, bold vision like this, there are always risks. And in this case, some of the biggest storm clouds on the horizon are actually forming over Washington, D.C. There are two major proposals floating around that could really shake things up. The first is a potential 10% cap on all credit card interest rates. The second is something called the Credit Card Competition Act, which would basically force banks to let you choose between two different payment networks on your card. Now, as you can imagine, Capital One is pushing back hard. They argue that a rate cap would actually make it much harder for millions of people to get credit at all.
And they say the other bill could wreck the whole rewards ecosystem that, both shoppers and stores have come to rely on. So, okay, let's take a step back and look at the whole puzzle here. You've got these mixed earnings, you've got two absolutely massive acquisitions going on at once, and you've got these big regulatory battles looming. When you put it all together, a really interesting picture starts to form. And here's what it all boils down to. Capital One isn't just buying companies, it's buying entire payment ecosystems. With Discover, they're grabbing a piece of the old school traditional payment network. With Brex, they get the keys to the next generation platform for business finance. They're trying to build an empire that covers the entire payments world from end to end.
So at the end of the day, this isn't just about corporate strategy and spreadsheets. This is about the future of how all of us spend and manage our money. Capital One is betting billions that they can build the one platform to rule them all. The only question is, will they be right?